So, with that being said, once again, I do appreciate y'all for taking time out of your day. Today's Super Bowl Sunday. Who y'all got, man? Y'all watching the game? Who y'all got? I personally think Seattle gonna run away with this one.
Yeah, I think Vegas gonna get involved.
Yeah. I feel like that offense just a little too prolific right now. And it's crazy. Sam Darnold about to get a ring before Josh Allen, Dak Prescott, Lamar Jackson. Like it just show you, man. Like, hey, God can turn your situation around. You know what I mean? Because it kind of remind me of the trading space, right? I kid you not. There was times where I watched other people just take off without me, and I felt like I was getting left in the dirt behind, right? And then you look up a year or two later, and it's like, man, you done made up all that ground and some, right? And that's just a quick lesson of life right there. You know what I mean? Sometimes you gotta trust your time and trust that whatever you going through is preparing you for the future obstacles and the future triumphs that you're gonna have. You know what I mean? Trading specifically, it's the hardest thing you're gonna probably do, but it is the most fulfilling. There's nothing like sitting here making $1,000 in a matter of minutes, 30 minutes, an hour. There's nothing like being able to make money from your home, spending time with your family. You know, I'm at a point in my life where the things that make me happy is just, bills paid in advance, fridge full of food, family taken care of, everybody happy, you know what I'm saying? Just to be able to do that off the skill set is a blessing, right? And you got to realize it's going to take a journey. It's going to take time, right? And you got to be willing to dedicate that time and that effort because you got to be aware of what it is that you're really asking God for. You know, there's millions, if not billions, of people that struggle to make money on a daily basis, and you're asking to push a button and make money from the comfort of your own home while everybody else gets up, gets dressed, struggles, goes to a place they don't like, sits in traffic, all of this stuff, right? So just dedicate, the necessary time and effort and energy. Just because you're sitting on a computer don't mean that you ain't putting in no real work, some real mental work, right? So just reevaluate your effort and your levels of your levels of effort that you putting towards this crap. Because I'm telling you right now, whatever you think you're doing, there's a famous saying in the military, I think it's like the Navy or something like that. When you think you about ready to give up, you're only like 40% there, right? So we all done felt like we wanted to throw the towel in on this trading thing at one point before. We was just tired of losing, tired of blowing accounts, tired of just of it not making sense, tired of seeing everybody else win. Understand that's when you probably like 40% to your breaking point. You got to really go all in, and when you do, you see the light at the end of the tunnel. It's a beautiful thing, and I can't wait for all of y'all to experience that, right? But at the end of the day, it's gonna be up to you because I don't know what your habits are when we get off this computer. All right. So this week was pretty solid, right? Pretty solid to say the least. Caught a nice little Nas short right here. Just dealing with the price action, and actually we're gonna start from a higher time frame because I really want to get a good understanding of what Nas actually wants to do, right? We've been bearish for a while. There is a chance that this may be a turnaround, right? But it's also a chance that we could go even lower, right? Because there's a lot of stuff happening. There's a, potential for AI bubble. A lot of companies are overspending without making the money necessary return on investment. There's stuff going on globally, whether it's Trump, wars looming. I mean, Epstein files, you name it. It's a lot of shit going on right now that kind of just drives away, optimism, right? And in times where you're in situations like this, and I'll be honest, a lot of these things are unprecedented. We don't really have previous data to go off of. And one of my homies hit me up asking me, "Hey, what do you think gold's gonna do? What do you think this and that's gonna do? What you think Bitcoin gonna do?" And I'll be honest, a lot of this stuff is not fun, like driven by technical analysis right now. A lot of this stuff is being driven by a lot of the news and the stuff that's happening in the world, right? And for example, it's Microsoft, I believe, if it's not 10, 15% drop, maybe 20, maybe 20 a little high. I don't remember the exact figure, but I think they had like a 15% drop or so. And this is the biggest drop in US history for the stock, right? The biggest drop in Microsoft's history. It has nothing to do with Microsoft earnings, nothing to do with, the product, none of that. It literally has everything to do with Bill Gates being in the Epstein file. So I say we're in a much different era of trading right now, where something that it has nothing to do with trading, or at least technical analysis, because everything has something to do with trading. All of this has something to do with trading, best believe. But now we're in an era of trading where technical analysis, right, is still important for risk to reward purposes, but moves don't necessarily always happen based off of, the technicals that we've seen. Like even the gold rush that we've seen for the past 18 months, the crash that we just witnessed, that's something that you can't really predict, if I'm being completely honest. So we got to be very strategic with the way that we trade moving forward. We got to be very strategic and picky with our opportunities and make sure we're choosing low risk, high reward trade setups, because you want to be in a situation to where you don't have to win that much to make money. All right. For me, for example, if my win rate was 10, 20%, okay, I'll still make money. I know I say this just about every call, but I keep reiterating it so it really gets through to your head that you don't need to know what's going to happen next to make money. All you need to do is allow risk to reward mixed with the law of averages to protect you. The law of averages means you're not going to keep losing. It's just not going to happen. I mean, anybody can win eventually, right? And if you have that approach, also mixing that with, low risk, high reward trade setups, you're going to come out profitable, right? So this is how you protect yourselves in times of uncertainty, stuff like that, where you don't really know what the market's going to do long term. You're just very selective with your positioning, very selective with the trade setups that you take. As long as they have very high return potential, eventually you're going to hit and make up the times where you don't necessarily aren't necessarily on the right side of the market. Now, even with that, I'm not saying let's be reckless. I'm not saying let's not, try to pick the best setups possible, but I'm just saying it's not as urgent as you might think it is if you're just trying to pull money out the market. That's our objective, is to pull money out the market. All right. So as we come down to nines, what is it that I see happen? Right. Obviously the market did react from, this demand zone down here. And yes, it is producing some bullishness, obviously. That's what we see this reaction come from right here. But if I'm just being completely honest, I'm not sold on the market making new highs just yet. If I just look at some of the price patterns that we have, I do think we're setting up for a nice heavy crossover to the downside. All right, we got some relative equal highs over here to the left that we came and cleared out. As we transition to the downside, we did have a strong reaction off of demand here. We come back into this area of demand, and then we get a weak reaction. So that's a weak hezi. And then we break structure to the downside, breaking these lows here, which is my crossover. So now I have a weak hezi crossover. And if I use that high as internal liquidity, all right, the market will likely come and clear this point out and take the money above these highs. And once it does that, I can see it respecting this area of imbalance here to go lower, targeting this low right here. All right. So with that being said, I believe that this will end up being a trap. Right now, how much is of a trap is it really, considering it created this bullish move? I mean, you can still make money off of it. But the term trap, in my opinion, is not whether or not you get a reaction, it's whether or not this structure is going to hold and give you a new high, right? Most traps are going to give you some sort of reaction. That's okay, right? But what you have to be able to understand is that some areas of demand are going to create retracements in order for the next move to happen, while other areas of demand are going to create continuations that break old structure and make new highs. So you just have to be able to differentiate between the two. You can still make money on both. That's the thing I want you guys to understand. Me, I do trade on the lower time frames, right? My execution is typically on the 1 minute or the 3 minute. So I'll take this reaction all day, but at the same time, it's about knowing when and where you should probably close your trade, when and where the market is likely to switch trends back to the downside, right? So if we got a good understanding on that, then you can know whether or not this is a short-term play or if it's a potential long-term play. All right. So just for this, I believe this will be a short-term buy that took place last week. All right, even just looking at it, obviously, this is an area of demand. But when I look to the left, there's still a lot of weak lows over here that need to be cleared out. So what's the chances of this being the area of demand that sends the market higher when we have so much money left over here to the downside that we can come clear out? And then also on the daily chart, we do have this little area of imbalance right here in the form of a breaker block, right? Now, a breaker block is, you got this area of supply right here. The market comes up to it, blasts straight through it, right? So it doesn't respect the supply right here, but it breaks through it, leaving this area of imbalance, all right? You see, these large candlesticks right here. That is your area of imbalance. So typically what'll happen is you'll get something like this, all right? Then the market blows straight through it, but it'll come back to continue, all right? So this area here would be considered the breaker, all right? So just understanding that, that's what I could see happening. So I do believe Nas will continue bearish, all right? Work its way down to about 22,200 range, right? Maybe 22,350 could go as low as like 21,800, but this is just the window of opportunity. Like once the market gets there, you'll look for lower time frame, signatures to actually get into your entry. But overall, that's the area that I see some action coming into, right? So now we come down to this time frame here. All right. Okay. So now we come into this area of demand right here. The market reacts, clears out an old high, comes down, makes a weak hesitation. All right. Then makes a new low. All right. So now let's go through our steps for entry. All right. First thing we want to see is a strong high. All right. This high is higher than this high. Then we have a hesitation off of demand, which is our hezi. Strong high, hezi. Crossover is a new low. All right. New low being lower than the previous lows. So that's the pattern right there. Once you get this pattern, you then know that the high of the week hezi is where you're going to look to get into the trade, right? So when the market clears the liquidity above this hezi, that's where we can start looking for sales again, right? So as this market just keeps pushing up, market will probably start to consolidate, might start going lower, right? If it starts going lower, let's say it breaks a low, makes a new low, makes a lower high. A lot of people go start selling right here. Then we make a new low, we make a lower high. More people start selling. What happens when people start selling is they start selling and they'll start putting their stop loss, all right, above the highs that they got in. And when that happens, there's a large influx of money that comes into the market because now you have willing participants to take trades. Okay. So when the money starts coming into the market, it just makes this zone look that much more attractive because the market is probably going to manipulate those people out and then drop. So this is what I would like to see, right? I love to see the market react underneath where I really want to get in. All right. So if I'm looking for a sell right here, I would love to see the market start going bearish before I get to this area because it just makes me know that this money is being built up because most traders lose, right? So they're going to have to suck in early traders by making it seem like the market is ready. And then they get taken out. That's going to be the real move. And then we make our money. All right. So that's what I'm personally looking for on this particular trade setup. I'd be looking at 25.5, honestly. Like 25.5 is a good round number, 25,500 to be exact, right? Just a round, bold number that you could take the trade from. Obviously, if you're trading this live, let's say this happens during a New York session or something like that, obviously you can time it a little better, right? Because I'm giving you guys overall areas to look at right now. Like, you can get in here, put your stop loss up here, right? But this is typically not how I trade, right? One to four is to award is great for most people, but me personally, I like to take trades more like this. So I'm probably going to be timing this out perfectly on the 1 minute chart, right? When I see this 1 minute price pattern and stuff, I take my jabs and I take my attempts on the lower time frame, right? But overall, for the sake of this being a weekly outlook and not a live trading call, right? This is the overall setup I'm anticipating here. First initial target will be the low of the trap. All right. And final target should probably be this region that we already spoke about. Right. It's 22,000, it's 22.3 area, 22, this little region right here. Once we get down here, I could see this little bear cycle being over with, knock out some decent buyers, get about a 15% drop or so. Anytime the market drop anywhere from like 15 to 20%, that's a solid buy opportunity, right? So if we get down into this region down here, that'll be about 15% drop. If you drop 15 to 20% in the stock market, that's an easy buy, all right? Let's keep it pushing. GBP USD. Last week I caught this buy right here up to this high, and then I missed the sell. So I was super frustrated about that because this sell, that was the move for real, for real. Like y'all could just see how easy that one was. Create that high, take it out. There's a lower time frame, heavy crossover, get you another entry there. And that one just completely died, made new lows. Unfortunately, I did miss that one, but now what is it that we see happening? All right, with the current price action. All right. And it's real simple, guys. Real simple. I'm gonna go to the 1 hour so you can see it a little more clear. All right. Let's get some of this stuff off our chart, clean it up a little bit. All right, so this is an area of demand right here. Why is this an area of demand? It's because it's a low that pushed into a new high right here. All right. So when the market reacts off of this area, it's gonna give us our hezzy. All right. This is the hezzy right here. Okay. Now we analyze the hezzy and we say, is this a strong movement? Meaning, does the reaction clear highs before it drops? Right? No, the reaction does not clear highs before it drops. So that means it's a weak hezzy. You see, you got one reaction creates highs, another reaction creates lower highs. So that means the reaction did this, all right? Reaction did that and then dropped. So that means there's money above the reaction. So the market's gonna retrace to take it out and then drop, right? Like that. So now that we got that situated, we can come down, zoom in a little bit. Let's go to the 15 minute. You see it real clear right here, all right? So this is not a strong reaction. Reaction one creates this high. Reaction two creates a lower high. Reaction three creates even a lower high. So now this is your hezzy right here, right? So that means there is money resting above that hezzy. So this retracement should come and take out this hezzy, the high of the hezzy. And then from here you can get that type of price action, right? So that's what I see happening on GU. A 1 hour chart, you got a little, I don't know if you call it an imbalance exactly, but you got a decent area of supply right here, right? You do have, some displacement. You got some strong bearish candles. So again, let's go through the steps. We got a strong high, all right? Hezzy, crossover, take out the weak hezzy, you take your trade. That's the entire pattern, right? Strong high, hezzy, crossover. See, strong high, hezzy, crossover. That's it, okay? And if you have this area of displacement, or if you have like imbalance or whatever above the strong hezzy or above the hezzy, excuse me, then that's also a good sign, right? So that's something that I'll be looking for this week. Let's see where our targets could be. Right off the bat, I see an area imbalance right here that looks pretty attractive. All right. So right off the bat, I see this being a potential target. So my mind frame would be to take a sell up here, targeting this right here. All right. So, so again, that's a 1 to 5 risk to reward. All right. But again, if you trade in live, you could probably get more of like a 1 to 10, 1 to 15. If you could time it perfectly on the lower time frame, right? This is just my current outlook, right? So that's what I got there. Let's check the DXY real quick, see what we see. So we expecting GU to go a little more bullish and then drop. So that means the DXY should probably go down a little bit and then continue up. Let's see if we see any correlation there. All right. So market can come down a little bit here. Probably continue up. Let's see. I mean, you're still definitely in a downtrend, right? You're still definitely in a downtrend overall, but I do see the market possibly going a little higher. Previously, I was looking at this gap as a potential reaction. We never got it. So go ahead and clear my chart up of that. And yeah, I do believe the market can um, go bearish again, but just not at this moment. Right. I do see the market seeking higher prices. Right. I don't really see nothing to the left I want to sell from just yet. Maybe if we clear out this high, we may get a sell from this area of supply. That's a possibility, right? But overall, I do see the market pushing up bullish for now, all right, which should cause some bearishness on the DXY. All right, now this is the 4 hour chart, or cause some bearishness on GU, excuse me. So from here, market probably drop a little bit. Maybe it clears out these lows here and then continues. But overall, I do see more bullishness on the DXY, which should lead to more bearishness on GBP USD. All right. So um that's what I see happening there. All right. Euro USD. It's another one. I took some buys in here, but after the first couple touches, I realized the market wasn't just going to pop up like I thought it was, right? And here's the thing about trading. Sometimes you take opportunities and then as they play out, you realize, okay, maybe this is not going to be how it plays out, right? But you still have to take the trade sometimes to even see how it plays out. Sometimes we look at things in hindsight and then we be like, oh, okay, the market didn't move. But, you could take that same trade next week and then, say I took the trade right here, you could take this trade next week and it take off, right? So even though this one ended up consolidating and not really going nowhere, sometimes you still gotta take it, just to even see how the price action plays out because we don't really know that this is gonna happen until it happens, right? So just keep that in mind. You have to be flexible and, you know, confident enough to take these opportunities. And that's why I focus so much on risk to reward. My risk to reward is so good. I'm never scared to like take a jab at something. And there's times where I still hesitate from time to time because us as humans, we're not perfect. But the goal is to make your strategy that makes it as simple as you can, right? To, be willing and confident in your technique, right? Not saying you're gonna be perfect, but you'll be better than what you are right now. All right, by focusing more on risk to reward than win rate, because win rate puts a lot of pressure on you to be profitable. Risk to reward does not. All you have to do is keep shooting and it's like flipping a coin. But when you land on heads, you win $100. But if you land on tails, you lose $10. Even if you landed on tails 3, 4, 5 times in a row, you still gonna be confident to flip the coin again. So I created a technique that allows me to remain confident even if I'm wrong a couple times a day or a couple times a week. All right. So now let's come back to, Euro USD. If I just take a look at this right off the bat, I see strong low potential, right? It's not the strongest low, but I do believe this low is strong enough to create a little bullish run like that before it continues back down, possibly. All right. Now we already looked at the DXY. I said the DXY was gonna go down a little bit, then keep going up. Euro USD pretty much acts as an inverse of the DXY. So if the DXY is going to go down a little bit, then go up, that means Euro USD should go up a little bit, then go down. So when I'm looking at this right here, again, I do see hesitation off of demand. The hesitation creates weak highs, right? So I'm gonna draw, you know, this right here, label it as internal range liquidity. All right, so this should be where the bullishness goes to, and it'll probably stop somewhere up here. All right, could stop like right here. It might come a little bit lower. We just gotta see. When we get there, we'll cross that bridge when we get there. All right, but since I do have an idea of where the market's gonna go, I can take trades into that direction until we get, to this point. Because if this is internal liquidity, and I'm gonna just adjust it a little bit right there. If this is my internal liquidity, that means I could really be bullish until I reach 1.1885, right? And then once I reach 1.1885, then I'm not going to be a buyer no more. So let's just take a look at it, right? So we got a weak low here, weak low, weak low, weak low, weak low. Then we take it out with this little, with us clearing these lows right here, right? So we just cleared those lows. Now the market is pushing up and we actually just broke structure a little bit right here, all right? So now let's go ahead and go through our process. So here we have a hezi, okay? Hezi off a supply. Why is this supply? It's because a high that led to a new low. Y'all see that? Okay. So This being a high that led to a new low, that means that this is an area of supply, okay? That means that that's an area of supply. I'll clean my chart up just a little bit. I don't want to get too cluttered. So, okay, again, this is a high that led to a new low being made, okay? So when the market hesitates off of this right here, we want to analyze the reaction, okay? So reaction one creates a low right here. Reaction two creates an equal low. Y'all see that? So the fact that the hesitation created an equal low, that means there's money underneath it, okay? So this is the hesi. All right, so we got strong low because this low is lower than the previous lows. Strong low, hesi, crossover. All right, that's the whole pattern right there. So the moment we create that pattern, now I know where I should be looking to become a buyer. All right. So I'm gonna be look to become a buyer underneath this line right here. All right. So underneath 17,855, I can become a buyer. All right. 17,855. All right. Now let's see how many pips this entire zone is. All right, so that's 24 pips. That's kind of a lot. Okay, that's kind of a lot. Let's go down a little lower and see if we can refine this anymore. All right. As we go to these lower time frames, you get a little more details and it helps us refine our entries a little bit more. All right. So obviously, these are some weak lows. This is a weak low. This is possibly a weak low right here, too. Right. So what we could also do is refine the zone down like this. Okay. And now what that does is that makes our zone a lot smaller, right? We was at 24 pips or so. I think I had it down here though. But either way, it still narrows our zone down to 13 pips, okay? So now we could possibly even use this here as a point of internal liquidity and come down a little more. Lower time frame. The details matter, guys, and don't let nobody convince you that they don't, because this is the difference between you risking $500. I'm just trying to give you a realistic number. This is the difference between you risking $100 and you risking $50 and still making the same amount of money, right? This is the difference. So you want to be able to, refine these entries down as much as you can. What if we could refine the entry down to this, right? And now the point of interest is only 6 pips or 7 pips. So now you went from 24 pips down to 7. Now you could risk 3 times as you can take a position that's 3 times as large without risking any more money. So now if you was to drop a 3 lot instead of a 1 lot, and if you caught 50 pips, instead of catching, instead of making $500, you'll make $1,500, right? So this is why it's important to, be very, detailed with the lower time frame. A lot of people think the lower time frame is just full of noise, and I think those people are just full of nonsense. Because if you can get really precise with these lower time frames, it will exponentially increase your profitability. All right. So again, we go through our process. Got weak lows here, weak low, take it out, strong low. Now as we transition up, this is a hesitation, right? This high, I wonder what caused it. All right, but this was Thursday at what time was that? 3:30. Market created this high, right? So the market did hesitate here. before it crossed over bullish. So again, this could be that aggressive internal range liquidity. If you want to take the trade underneath this one, just to be sure that you get into a position, so be it. But if you want to really get real precise with it, I'd probably get in under this point right here. All right. And then now that we know where our sell area is, remember it's 17.7, or excuse me, 18.75. That's where we're going to stop buying. And then down here is where we can start buying. Now we know exactly where the buying should start, and we also know where the buying should stop. Okay. So this is how you box the market into a specific area and you try to force it to do what you want it to do within these confines, right? So again, it's not to say that this is going to be right 100% of the time. What it's saying is if I can look at all of this information, all of these candlesticks, and if I can refine my area of opportunity to this small area of a reaction, but I'm looking at this much area for profit, all right? Now, win or lose, I can be profitable, right? Meaning this is a 1-to-7 risk to reward. If I lost this trade 5 times, but I won one time, I'm gonna make money. And this is the way you guys need to trade. Because we humans, none of us are gonna be perfect every single time. But if your risk to reward is very great and you know exactly where to pick your spots in order to maximize your potential reward while minimizing your potential risk, the law of averages will step in and protect you. The law of averages just means like you're gonna be right eventually, right? You're not gonna just lose 20 straight trades, right? Like regardless of the strategy you use, none of that. You're not just gonna lose 20, 30, 40 straight trades. It's not gonna happen. So if you know that, then you create a strategy that allows you to profit even with a low win rate, right? And if your win rate is high, so be it. It just makes you that much more money, all right? So again, this is where I'd be looking to buy. This is where I'd be looking to take profit. Once we take profit, this entire region can possibly be a sell. I'm more attracted to the higher region up here, but once we break up above this high, like right here, I'd probably be out of my buys and I'd be preparing myself for the next move to the downside. All right. So I'm looking for this to happen. And once we get up here, something like this. All right. Does that make sense so far, guys? Let me know if I'm making sense. So y'all following me? Y'all following along? Beautiful. Beautiful, beautiful, beautiful. All right, all righty. And once again, if you guys are getting value, just do me a favor, man. Give your boy a follow. It'd be much, much, much appreciated. Do my best to make sure um, we articulating this effectively for you guys. All right. Let's move on to gold, and then we shall wrap it up. All right. I don't trade a whole lot of different pairs. Try to be effective with a handful. Now, I'm calling more signals now, so I do trade more currencies now, but overall, like, you don't need a lot to make money, guys. So, just be mindful of that. You don't need to trade 50 pairs. Now, if you're a professional, you know what you're doing, trade what you want to trade. But if you're still trying to find that consistency and that profitability, don't put too much pressure on yourself. You can make more than enough money by just trading, a few pairs, right? The more pairs you trade, the more calculations with risk to reward you got to do. You might have two, three, four trades you want to take in one day. And now you're like, okay, how much should I risk on trade one versus trade two versus trade three? Like that just complicates things, right? Keep it to a minimum. All right, and you guys will be all right. All right. Hello. So gold. Gold, gold, gold. Let's take a look. Um, I mean, after this drop, man, like I said in the beginning of the call, this drop, regardless of what people say, I don't believe the drop of this magnitude was 100% because of the market being overbought, right? There's a lot that goes into this type of stuff. I'm not trying to make this a conspiracy theory type of call. Like y'all know when we trade live, we can, we got the time to just kind of throw a bunch of theories around because most of the time we waiting on a trade anyway. And this is a weekly outlook. I'm not trying to be here all day going down the rabbit hole with y'all. But if you really do a little more research into what's going on, there's a couple of reasons why this could have happened, right? Um, a lot of people are rich on paper from buying gold, but they don't own physical gold, right? So it's one thing for your trading account to have a certain dollar amount in it, but if you wanted to cash that gold out, if you want to like take this money and actually purchase physical gold with it, that can cause problems if the gold is not readily available. It's like the bank, right? If everybody in the world decides to go to the bank and empty their account, they'll realize that all the money is not there because they got something called fractional reserves, right? Meaning that every dollar that the bank has, they can loan it out eight, nine times, right? So realistically, there's probably 10% or so of all the money that people actually say is in their account. There's probably 10% of it that actually exists, all right? So, first theory that I have for this drop is that a lot of people were trying to physically cash out their investments into physical tangible gold, and they weren't able to do it, right? Now, my other theory is more of like a conspiracy type theory, but it could be true because with the Epstein files, anything is possible at this point. I hope y'all realize like you can't put nothing past these folks, right? Anything, quite literally anything is possible. So, the speculation that Israel may have crashed the markets in order to get Trump to bomb Israel, which makes sense, right? Crash the markets, we bomb Israel, the markets fly, right? And if we don't bomb Israel, gold keeps dropping, right? Now, how do they have that type of power? Very, very deep rabbit hole. If you want to like really get into it, I'd recommend you come here. Rumble. And if you guys really want to go down the rabbit hole of why they got this type of power, you can come here. And this will probably explain a lot for you, right? Because everything, like I said, I'm not trying to go too deep with this right now. Like they might be listening to me right now. Who knows? But anyway, if you really want to understand why the government does a lot of the things that it does, all right, and realizing that our markets are reacting to wars, they reacting to, things that politicians are doing and all of that. This would probably be a really good documentary just to understand, how they can crash a market in order to get us to comply and stuff like that. But that is on Rumble. You're not gonna find it on YouTube, just so you know. But with that being said, I'm still gonna look at this with a technical approach. But you have to be mindful that these other factors exist. There's other variables other than what you could just see on a chart, right? So just based off of technicals, because I can't control the other stuff, I can just control what I control with the technicals. I can see this being a potential hezzy crossover, right? One thing I do see is that the markets are almost balanced right here. So I don't want to put, go too crazy on this position. If we clear out this high, I do think we can get a reaction. All right. So I'd probably play the reaction on a lower time frame and see what we get, right? Market's starting to range a little bit. Maybe we pop up and then shift back down. If we shift back down, maybe you can snag an entry on a lower time frame and see how far it goes. You got a lot of weak lows over here that the market could come grab. All right. So I'll be mindful of something like that. Also keep in mind that the market could just keep flying to the upside. I hate to give you a counter, intuitive approach of this, or, I hate to just be both sided on it, but that's just the nature of gold right now. Again, my goal is to teach you guys risk to reward so you don't feel like you have to know everything that's going to happen. Because if the risk to reward is good, like I said before, you can be wrong and still come out profitable over time just because eventually you're going to be right. You picking the right setup side as well as the sell side, right? So on the sell side, I gave you my opinion. We probably hit 49.90, may get a reaction right underneath 5,000. Now on the bullish side of things, what I could also see is if this order flow just maintains, there's a hezzy right here. All right. Show you guys on the 1 minute. Okay. So we have a hezzy here, crossover, market retraces. All right. Takes out the low of the hezzy and pushes into this imbalance right here. Market pushes back up. Right. We have another hezzy where it creates internal range liquidity. And you see there's this little imbalance right here as well. All right. So you got this hezzy crossover. The market could do this. Come on. What's going on? I'm trying to get that so it's before I come back. Yo, I do not know why that's happening, y'all. That's been happening a lot more lately. It's damn Xfinity, man. Sorry about that. I'm not sure what the last thing y'all heard was. Somebody remind, well, tell me what's the last thing y'all heard. I mean, I don't know how long I was talking to myself. Hezzy and new liquidity area. Okay. That's all. That could be anything on my Zoom calls, but all right. Got you. So, again, right here, we had a hezzy, we had a crossover right here. Market pushed down to take out the hezzy. This could have been a bullish entry right here, right? Y'all still hear me, but All right, y'all. I'm just gonna wrap this thing up because it don't want me to be great. I don't know if I gotta update my Zoom or what, but I don't know, man. It's been a little weird. But just to wrap it up, guys, this is the last pair. I'm looking at this 49.53 region underneath this hezzy right here for a continuation. So either I think we're gonna get a sell above that higher time frame hezzy, or we'll get a continuation here. Both of them are great risk to reward. You can explore both options without blowing your account. And even if you right on one and wrong on the other, you'll make money. All right. So with that being said, guys, the computer stream acting funny. Again, if you guys got value on this call, feel free to give your boy a follow. And it'd be much, much, much appreciated. And any comments, questions, or concerns? Any comments, questions, or concerns? Now I can't type. Gee whiz, I'm going crazy right now. Comments, questions, or concerns? I'm actually hop off here and pull it up on my phone for questions, right? Because we all doing so far as marking up shorts.